What's happening, Auxly traders and investors? It's Rod with Pow Group. Welcome back in the pursuit of wealth. It's Saturday, February 12th. Happy Saturday. And I hope you're having an awesome weekend so far. In this short video, we're going to be discussing the stock Auxly Cannabis Group, ticker symbol XLY. We had some ticker requests from private Pow Group members and what was a good long-term entry. So going to go over that. A lot of people were commenting on my videos as well, asking about Auxly, why it's down. So we're going to go over my thoughts and opinions on the chart and some reasons why we could be down, in my opinion. Before we jump in though, make sure to smash the like and subscribe to the channel, tick the bell, and you'll be notified on any future updates. Also, I want to share with you the investing.com forecast. So it's predicting earnings for April 1st, first week of April. If we look back to last year, it was on the 26th. So that's a general idea. It's forecasting negative 0.01 on EPS, slight improvement from last quarter, and also 29.7 million on the revenues, which is about 5 million higher from the previous quarter, which was a slight miss. But you can see here we're on a nice trajectory. We twofold from May to August. We went from 10 million to 20 million. Auxly's been on an absolute tear. It's gaining a lot of market share. It's very popular here on the western coast of Canada. Hearing nothing but great things about it, and I tried some of their products. They're fantastic. This is one of my longer term holds. I did a top 5 cannabis holdings video. You can check that out, both MSOs and licensed producers. My father actually added this to his long-term no-touch portfolio as well. So you can check out that video for more information on that. And let me know in the comments below if you try their products, what products you enjoy the most, and if you've seen a lot more presence from Auxly in local stores. Also, Matt Lamers, this is a reputable source. This is his Twitter. He tweeted out, and this is from Stifle and Headset. And this is for only 4 provinces in Canada, but it's breaking down the market share, and it's for Alberta, BC, Ontario, and Saskatchewan. You can see Auxly and Hexo are now number 1 and number 2. Auxly is 7.5% market share, so like I said, it's been on an absolute tear, and hats off to Hexo and Auxly making it to the top of that list. Canopy not even in the top 3 anymore, which is pretty baffling. Taking a look at the Auxly chart here on the weekly time frame. Yeah, so the weekly time frame, just from the highs here at 35.5 cents, which was the high back in the first week of November, we've been on a brutal slide down over 62% here in about 90 days. And if we take a look at when we topped out in February of last year, when the whole sector entered a bear market, we're down about 75%. A lot of names are down 80, 90% across the board. And we could potentially see a bit more downside. We have key support here at 13.5 cents, which we closed right on, and we have yet to lose it. And it's a weekly bear flag. If we lose that, anything under 22 cents, I believe it was, is a weekly bear flag. So if we do lose support at 13.5 cents, that's going to confirm the bear flag. That's why I think we're seeing more downside. The technicals are not looking good at all. And like I said, a lot of names are down 80 to 90% from their February highs. And like I said, Auxly is actually holding up a lot better than most, only down about 75%. So I think we could pull back a bit more from here. I could potentially see a pullback to 12 cents. We do have key support there at 12 cents as well. And then after that, it'll be 10 cents psychological. But anywhere around these levels, in my opinion, is a great long-term entry. I filled yesterday. I bought some yesterday. I filled at about 15 cents, and I'll look to buy again if we get close to that 12-cent support. And then again at 10 cents, I'll just be taking a scale-in approach. But we are getting close to weekly oversold territory, and it was down over 11% yesterday, while Sundial was up over 18%. A lot of names, like I said, seeing those reversals, and we know that they laid off some workers at Auxly, so that could be spooking a few investors. But personally, I think it's just par for the course. We're seeing, I don't think there's any major red flags. I think we could see a bounce soon. We do have a lack of resistance, like I said, up to that 35 cent area. And if we take a look at the monthly time frame, one thing I wanted to highlight is we have yet to close a week or a monthly candle close over those monthly EMAs. So if you're like me, you want to take a scale-in approach, maybe you're adding at these levels, you're going to add again at 12 cent support, and again at 10 cents. Maybe you're a bit more conservative and you're saying, well, okay, I don't want to catch a falling knife. I don't want to be that aggressive. I'm not okay with a drop to 10 cents. So maybe you want to wait for a monthly candle close over EMA 26. We've yet to do that since we lost the all-time highs. So a simple statement would be, if we close a monthly candle over EMA 26, which is currently sitting at 32 cents, if we close a monthly candle over 32.9 cents, so we'll say 33 cents, then you could look to take a position and then scale in and buy into strength. That's another opportunity. Or you could wait until we get above 51 resistance, which would confirm a macro level reversal, which was the high of February last year when the whole sector topped out and then entered a brutal 12-month bear market. I think we're going to see reversals in the sector. And like I said, this is a great long-term hold in my opinion. If you're adding at these levels, if you're a bit more, if you're a bit less conservative, but still conservative, you could wait for weekly uptrends and daily uptrends. I want to share with you the daily chart here. This was a pretty brutal bull trap here. We had the low high at 16.5 cents, higher low at 14.5 cents. Then once we broke 16.5 cents, we confirmed the daily uptrend, but then we just faded it all back and we lost the daily uptrend. We actually confirmed a daily downtrend here with a high, low, lower high, and a lower low. So that's how quick things can change, and why looking at the chart, just checking in every couple of days can really pay dividends. If we take a look at how quickly that changed, in a matter of a week, we confirmed a daily uptrend, and then in the next week, we confirmed a daily downtrend. So that's just an example of how quickly things can change. So now from here, we need to confirm daily uptrends, weekly uptrends. So if you're a bit more conservative, but you don't want to wait for, if you don't want to wait for it to close over the monthly EMAs at 33 cents, I want to get in, sooner than that. Well, you could wait for another daily uptrend to confirm. But we know that what happened last time that happened. So maybe you want to wait for a weekly trend change. So we want to see a weekly bounce get underway, which was happening last week. And here we are down testing support. So let's say if we were to bounce, we come up, we form a higher low, and then as soon as we break to a higher high and confirm that weekly uptrend, maybe that's when you want to take a position. Maybe you're super conservative and you're waiting for monthly uptrends to be confirmed, not just a monthly close over the EMA. In my opinion, there's no right or wrong way. It's just the level of risk that you're willing to take, right? And also how much capital you're planning to allocate to it. But again, another reason why I think we're down is just because it's par for the course. We had the death cross back here in the summertime in July. In mid-July, we had the 50-day crossing down through the 200-day moving average, which we refer to as a death cross. And from there, we've just been in absolute free fall mode. And like I said, we're not going to be confident in a bottom until we start to see daily, weekly, and monthly uptrends being set. If we take a look at the weekly time frame, we also closed underneath the 10-week moving average there at 17 cents. And look where we rejected, look where we topped out on the high of that weekly bounce, right at that 10-week moving average. This is a moving average that I love to use in my analysis. Also, the stochastic is crossing bullish, but still some work to do here on the MACD. And taking a look at the weekly moving averages, we have none nearby here until 27 and 28 cents. And then look at where we topped out on that previous weekly bounce up to 35 cents, right at those EMAs, those MAs on the weekly time frame. And like I said, that death cross was a huge warning sign that we could see some further downside. And like I said, the whole space was down 80 to 90% plus, and likely gave us an indication, and it was a clue that we could see XLY follow suit. So if you're wondering why it's down so much, again, they laid off some employees, obviously didn't really sit well with investors and maybe spooked a few people. Also the death cross that we had, and just catching up to the rest of the sector, now down almost 75%. So I think that a bottom is near, but I think we could potentially see a drop down to 12 cents. I'll be a buyer at those levels, adding to my long-term no-touch account. Let me know in the comments below if you're planning on adding around those levels, or if you're waiting for 10 cents. Let me know your game plan. Are you waiting for weekly uptrends? Are you scaling in? Are you super aggressive like me? Always love hearing from you. Pretty much going to end it there. I think that's everything that I had to mention. But like I said, we're not going to be confident in that bottom being set. I think that the bottom is close. And like I said, we were close to weekly oversold. So if you're looking for an entry, watch that 12-cent area and weekly oversold conditions for any chance to potentially load up in long-term accounts. Going to end it there. Thanks again for joining us on The Pursuit of Wealth. Make sure to smash the like, subscribe to this channel on your way out. Have a great rest of your weekend, and we'll see you next week.